Now to Cora Gold. Cora Gold have been exploring and developing the Sanankoro Gold Project in southern Mali for some years now, and have been hitting their milestones with increasing regularity. Well done, Bert. Cora published a very positive MRE, or mineral resource estimate, in November. This added 200% to the resource, with 809,000 ounces, both indicated and inferred, at 1.15 grams per tonne. If you're not into mining, 1.15 grams per tonne of gold is very good. A definitive feasibility study comes in the first half of next year, and the open pit mine project has been underpinned by a $25 million term sheet from Lionhead Capital. Bert Monro CEO at Cora joins us now. Over to you, Bert.
Brilliant. Hi, everyone. I'm Bert. As Donald said, I'm the CEO of Cora Gold. I've been CEO since January of last year. Cora at the moment is on a really exciting journey. We delivered a scoping study on the project in Mali at the start of last year, and are obviously rapidly moving towards completing a feasibility study by the middle of next year. Just to step back a second and just to overview Cora, we're AIM listed back in 2017. Our focus really is in West Africa. It's a massive gold region globally. We've got a number of permits for exploring for gold in southern Mali predominantly, but also in West Mali and also in Senegal. Our main project is called Sanankoro. It's got a scoping study completed on it, which showed some very high IRRs. Importantly, we wanted to really grow out the resource further before we moved into completing a feasibility study, and we delivered a 200% increase in resources last month, which was really exciting and really pleasing to see. We're supported by some great shareholders. Hopefully some of you are here and listening today, but we're very pleased to have a number of very large shareholders who have also been very supportive of the business. And importantly, we've got, and fairly uniquely for a company of our stage in the life cycle in the sector, have got a very significant term sheet signed with Lionhead Capital, which should support the development of Sanankoro post our feasibility study in the middle of next year. Just to go into these project portfolios, I won't dwell on it, and just to say also, if anyone wants to get more details that you don't hear today, you can always drop an email to Cora, and I'm happy to get back to anyone if I don't cover anything off or you're not able to get your question asked, so feel free to get in touch at any time. On the left-hand side of your screen, you can see that the Kenieba window, which has been arguably the most prolific gold belt in Africa over the last 20 or 30 years, a number of very significant gold mines which are world-renowned, including Sadiola, Fekola, and others. So we've got a nice package of ground there. It's a reasonably early stage, but it's right in the right postcode, which is nice to have. Our main focus is on what's called the Yanfolila belt, which is in southern Mali on the border with Guinea. Our main project is called Sanankoro. It's a block of 5 permits which are all contiguous, which you can see hopefully just to the east of the Kabada project. We've also got some permits I'll talk about later, which kind of donut around the Yanfolila gold mine, which offers some secondary optionality as well, which is of interest, but I'll talk a little bit later about that in the presentation. Other than myself, I think it's been really pleasing to see the development of the team over the last 18 months. I think we made some important hires. Norm Bailey joined us from Centamin. He had previously been involved in over 30 million ounces of discovery, all in West Africa, really. He was with the Redback team, which drilled out and discovered Chirano, which was over 6 million ounces of gold, and also Tazias, which I think went to over 20 million ounces of gold, and he was their exploration manager and head of exploration there. So he's got a great track record of discovering ounces in West Africa, and more recently brought in Russell Bradford as our project manager to oversee the DFS. Russell's got a great track record as well. He most recently built a mine called Asanko in Ghana, so he's got direct experience of building gold mines in West Africa. So a great guy to have on the team. Also just added Pete as well, Pete Whitbread Abuta, as an ESG advisor. And we've actually just hired an ESG manager full-time in country as well to help oversee and improve our ESG engagement in Mali as well. Dipping into the project specifically on Sanankoro, I've probably touched on some of these points before. I think excitingly, the project has a 1 to 2 million ounce exploration target on it. That's limited to a depth of 100 meters. This is essentially your first pass look at a project. So that was done back in 2018. We've drilled gold mineralization down to depths of over 200 meters. So the view from SRK at the time was, you could find up to 2 million ounces of gold just within 100 meters from surface. So certainly our 800,000 ounce resource we have at the moment, we feel there's huge scope to increase it On the back of that, we moved on and we delivered a maiden resource and a scoping study back in January of last year. Showed a great high IRR project, over 100% IRR at $1,500 gold price, which is great. And obviously followed up with a massive drill program we've delivered over the course of this year, 43,000 meters drilled, and we had a very nice 200% increase in resources. But I think it's worth saying the focus of that drill program was actually as much on infill drilling the resources as it was on stepping out and adding the resources. I think we importantly were looking to add indicated ounces so we could convert them to reserves as part of our feasibility study. I mean, had those meters all been put into growth of resources and just keeping them at inferred, obviously one would have expected a much bigger increase in mineral resource estimate. And the financing term sheet as well, we touched on earlier, but I'll talk more about a little bit later. Here's an overview of this drill campaign we conducted over the course of this year. As I said, it's 43,000 meters in total. We had some absolutely fantastic hits. I mean, 49 meters at over 15 grams a ton, 19 meters at over 31 grams a ton. These were seriously good drill intercepts we had, and showed huge potential for the project. The image on your right, what you can see there is essentially in the red area. It's the old December 2019 pit outlines, and then the green lines around it are how we've expanded the pits. I think what's important to show is we haven't actually stepped out very far to add 200% to our resources. We've stayed very tight on our existing pits. We've actually only drilled 7.5 kilometers of 33 kilometers of mineralized strike length on our permit area. So for me, whilst we're running very hard at delivering a feasibility study, we've got the term sheet in place already to help finance the project post feasibility study. I think the exploration potential on the permit's massive, and that's something we can look to develop further over time. Here's an update on that resource statement. I think there's two key things I guess I wanted to point out from this without getting too detailed on it. One is the significant conversion to indicated resources. Just for layman's terms, your initial discoveries and your initial resources generally inferred categorization, and that's a good enough categorization to complete the scoping study. But if you want to complete a bankable feasibility study to publish reserves and finance a mine, you need to convert your inferred into indicated. So, we had a dual focus in this drill campaign. One was to add in total more resources, but it was also, frankly, to get as much indicated as we could. So having nearly 70% of our gold in the indicated category was great, because that will obviously help the growth of our maiden reserves next year. But I think also importantly, we were targeting to get as much oxide material as possible. And I think it's important just to talk about what the value of the oxide material here briefly. Oxide material is essentially a free digging material. It has for us very high recovery rates. It obviously has a lower mining cost because you don't need to drill and blast it, and you can just dig it up and truck it away. And in terms of your processing costs as well, they will be significantly lower than an average benchmark processing cost as well. So for us, our oxides really are an exciting part of the project. At the start of this drill campaign, we thought we had oxides to depths of up to 120 meters. But now we've seen we've got oxides in certain pits down to over 200 meters, which is a real plus for us and gets us really excited about some of the opportunities with this project going forward. Another aspect, Donald touched on grade briefly. I think I've got some comparisons and to look at other oxide projects later in the presentation. I think in London, there aren't potentially a directly comparable project of our style. But I think what you can see here is people talk about cutoff grades, again, without getting too technical. Essentially, that you use a cutoff grade which is defined by the economics of your pits, which is defined by the foregoing gold price at the time. So we use 0.4 grams a ton. It obviously pulled in a lot of tons into our pit shells. But as you can see, if you used a 1 gram a ton cutoff, you've still got over 500,000 ounces of gold at nearly 2 grams a ton. So I think that what that clearly tells me is there's a lot of higher grade gold there, and ultimately there will be pockets of really good grade, which will obviously always help a mine plan. The next 3 slides are reasonably technical, so I'm not going to dwell on them in too much detail, but I think the plan view, you can basically see the pit outline, and ultimately we've kept the drilling fairly close to the pits. On the right hand side, you can see essentially a cross section of the ore body. The dark solid line is the old December 2019 pit shell, and then the stepped line below it is the new pit shells. So what we've essentially done is taken what was an average pit depth of 65 meters from our maiden resources, and we've taken them down to an average depth of about 140 meters in open pits. So essentially we've added lots of gold at depth below what were extremely shallow pit shells. We've also stepped out and increased the strike length of our deposits. I think it's important to say that all of our deposits are open both at depth and also up and down strike as well. So we haven't drilled out any of our deposits. All of our deposits, we essentially ended in mineralization. So that obviously gives us great potential for the future growth of the project and for adding ounces in the future. The next slide shows a similar pattern of events at different deposits. Here we are at Zone A and Zone C. Interestingly, at Zone C, these are our first maiden resources there. We historically had no resources at Zone C, so that was nice to have a new discovery come into maiden resources again. It remains open and offers plenty of potential for future growth in the future. And again, at Zone B, we encountered some really deep oxides there, so that's exciting. What you can see on the image there is it looks quite stringy, so you can see these pods of resources with gaps in between them in that image where you can see the pit shell outline. That isn't due to that hasn't been sterilized. There hasn't been results which have meant the gold isn't continuous through those zones. It just hasn't been drilled yet. So obviously, again, one would hope in future that potentially that would extend and join and make one larger pit with further drilling. Touching on our timeline, reasonably aggressive, keen to keep moving as quickly as we can. Obviously, just delivered the resource update. Excuse me. Due to deliver our ESIA in Q1, and then our feasibility study, our DFS, should be finished in Q2 of next year. It's obviously in our anticipation we'll then move into permitting and financing, and then construction hopefully before the end of the year. We appointed all of our key DFS contractors over the summer, and they've all done site visits and they're cracking on with their work. They're making really good progress. It's really pleasing to see. We've got aspects of various DFS drilling ongoing at site at the moment for hydro and geotechnical work as well. So site's still very busy, and there's still lots of work going on. But yeah, it's good to see that timeline. It's good to always remind yourself of the next step and what you're looking to deliver over the coming months. I think one thing which does set Cora apart maybe from some other juniors at the same stage as us is a very strong commitment from our leading shareholders. Lionhead Capital is linked with our largest shareholder, the Quirk family. They've committed a term sheet of $25 million on completion of the DFS to support the development of the project. They have said they're prepared to syndicate up to a third of that with other shareholders. So they're by no means, they're essentially looking to underwrite the $25 million, but they're happy for other shareholders to come in and share in it as well. So they're by no means trying to wrap their arms around the project. They're obviously trying to give us great support, and they're very committed to helping Cora develop the project and move us into production as quickly as we can. And I think that's been seen with strong support in fundraisers over the last 2 years. Now I'm going to step away and talk about some of the regional projects before we come back to some corporate slides at the end. These are our Yanfolila group permits, essentially sort of donutting around the Yanfolila gold mine. It's obviously been operating for a few years now. We've had some nice hits. Tekledugu, for example, sits extremely close to the Yanfolila processing plant. It's only 7 or 8 kilometers away. We've done fairly limited work on it over the last year or so. It's obviously something we'd love to get back to and spend more time on. Ultimately, we felt the best bang for our buck's been advancing Sanankoro at this stage, but we've certainly got some exciting hits in shallow oxide material. So plenty of optionality there. If we can make a discovery and drill out even a smaller deposit due to your proximity to an existing producing gold mine. Again, this Dangote project area, a nice one to pronounce for everyone. As I said, it's in the Kenieba window, arguably the most prolific gold belt in Africa over the last 20 years or so. Some earlier stage permits, but we've got some nice drilled discoveries. We've had some nice soil anomalies on them, and again, be good to get back and do more work and drill them out further in time. The brief overview on our share structure. I think probably better to go on to some of the peer comparisons on the next slide. But as you can see, we've got both Brookstone and Key Ventures is linked with the Quirk family, so they've been a very strong large shareholder of us, as well as Lord Michael Farmer, who co-founded Red Kite, which is a mine finance and commodity trading business. So they've been extremely supportive shareholders, as well as directors and management. Yeah, I think on the peer comparison, I think what I just wanted to really explain to people the case study of Robex. I think in in the London market, people are used to seeing projects which are sometimes underground, or sometimes they're quite deep open pit, generally all fresh rock mines. And I think people then ultimately are looking for different things in those. I think what you can see in Robex, it's a Canadian listed company. It's an oxide mining operation in Mali. It has 0.7 grams per ton. So as you know, our indicated materials are at 1.35 grams per ton. So significantly higher grade. I mean, they're producing 50,000 ounces at a sub $1,000 all-in sustaining cost, and I think last year they paid around a $35 million Canadian dividend off that. And I think that's the important point. I mean, we're trying to build a money mine, as I've heard someone at Whistle say before. You know, ultimately, you know, we're producing gold, but ultimately we're a business and we're looking to make as much money as we can. And I think you can get fixated by a specific number in this sector, and I think it can have a lot of technicality to it. But ultimately for us, free digging oxide material from surface. So hopefully some shallow oxide pits should deliver us hopefully good free cash flow generation. And obviously that's what we're looking to show in the course of our feasibility study, which is ongoing at the moment. Bit on Mali and Senegal. I think ultimately very prolific gold producing regions. I think importantly, both of them have had commercial gold mining operations for well over 25 years now. So you've had a number of majors and mid-tier companies operating there. Both have got very established mining codes. They've both got a very educated workforce and relatively decent infrastructure for West Africa. Our project, for example, is about 4.5 to 5 hours drive from Bamako. You do 80% of that, 90% of that on a nice tarmac highway. And then the last 25, 30 Ks is done on a dirt road. So, very good infrastructure in many ways. Politically, obviously, you've had changes of government over the last year, and there have been security instances in Mali in particular, which people have probably noticed. So I don't think there's any point hiding away from that. I think what I would say is Mali is a massive country. Most of the security instances are generally well over 1,000 kilometers north of where the gold mines are. And I don't think in 30 years of commercial gold mining, any gold mines lost a day's production for any security incident or political change that I've been aware of. So whilst it might have a bit of an interesting look when you Google it, I think it's worth bearing in mind that there have been some of the most profitable gold mines producing in Mali over the last 30 years, and they've done so uninterrupted, even in the midst of what might appear to us, with some security instances and other things happening in the background. Last slide, just an overview. I think hopefully I've summed up Cora pretty succinctly. Ultimately, we're very focused on delivering Sanankoro into production as quickly as we can. We've delivered a great resource update this year, over 200% increase in resources on the back of a scoping study from the year before. Our focus very much is on delivering a feasibility study over the course of the next 6 months. And then obviously from then moving into the financing and permitting as quickly as possible so we can move into construction. So that's it, Donald, and overview. Thanks everyone for listening, and looking forward to answering any questions there are.
Great. Okay, Bert, thank you. I've just got to say, you've made fantastic progress with Sanankoro. Well done.
Thanks. It's not my work. It's the work of the team, really. So yeah,
it's always a team.
I'll pass on their thanks on your behalf.
Oh, indeed, it is always teamwork. Definitive feasibility study. You say H1, first half of the year. When exactly in H1 do you think that might be?
I think it'll definitely be in Q2, if we're being honest. I think the environmental social impact assessment's due at the end of Q1. So it'll be sometime in Q2. Hopefully not right up against the end of it. But there's a huge number of work streams ongoing. And I think we're all aware of the complexities that the COVID can throw at you around logistics and timing. So it only takes one small bit of test work to get stuck in an airport or stuck not in the lab you want it to be, and to be delayed 3 or 4 weeks, and suddenly everyone will tell me that I've not delivered to the exact month I said to you today, Donald. So I think I'll stick to Q2 if that's all right.
No problem. Q2 is good by me. If you can deliver on Q2, I'm sure everybody will be delighted. Environmental reporting, EISA, and permitting. I mean, how are those coming along?
Yeah, great. I mean, we started the ESIA back in May, June time of last year. So we started it well in advance on the basis that we knew we were going to be pushing ahead. So all the monitoring is going on, and you know, all the various consultations are happening. So I'm really pleased with how that's going. In terms of the permitting as such, to move into the two significant permits, you need your environmental permit and your actual mining permit. So essentially converting your exploration permits to a mining permit. You can't do those significant factors until you've completed the studies themselves. So that's something we'll be warming up, obviously in advance. So I'm looking to go out to Mali in January, early January, I hope. So obviously you keep in good contact with the ministry, so they're aware of your timings and how you're progressing. So obviously once you've delivered the studies, you can hopefully expedite the permits as quickly as possible. And
was it last week you raised 4.25 million?
Yeah, it was. I mean, it closes tomorrow. So yes, we announced it last week, and the shares going to issue tomorrow. Yeah.
Great. So Rob Pickard asks, what proportion of that latest fundraise, the 4.25 million, what proportion do you anticipate will be used to fund Q1 exploration work? And let me ask, where will that Q1 exploration work actually be? And what areas are you prioritizing, asks Rob.
Yeah, it's a very good question. Thanks. I think to sort of answer it backwards, if that's all right, I think one of the key points of this fundraise was to enable us to complete the feasibility study and also have working capital through the period of permitting and financing. Obviously, with the aim being our next financing will be the construction financing. So the aim is to give us working capital to deliver through the feasibility study and into through the period of permitting and financing. That said, you know, we believe there's obviously excess capital there to obviously look to do exploration work. I'm just working through with the geological team at the moment around planning that drill program to kick off hopefully in Q1. I think everyone's going to want to see probably resource growth, but obviously for our team, we're also keen to continue to see growth in indicated ounces, which will deliver your reserve mine plan, so you can expand your mine plan as well. So we're currently just going through that at the moment and having lots of internal discussion around exactly where the drill plan will be and how many meters we'll do. But in terms of budget, to specifically answer the question, probably around 15 to 20% of it hopefully will be going into exploration.
Okay, well, that's a good response. How much we're talking resources and exploration. I suppose what I always think, well, people instinctively are going to go for the easiest and most easily available resources first. They're going to go for the low-hanging fruit. So why are you so convinced that there's more good stuff to come, as it were?
I guess on one hand, you've got the exploration target, which obviously identified 33 kilometers of mineralized strike length. We've only drilled 7.5 kilometers of it. So clearly, you'd be extremely unlucky if all of the mineralized sort of surface strike length was unmineralized at depth below it, when we've obviously in the first 7.5 kilometers found plenty of gold. I think also you'd be extremely unlucky if all of your pits essentially ended in mineralization in your last sets of holes. If suddenly your next step out hole on every pit was barren, it's obviously extremely unlikely. The style of mineralization in West Africa, you know, these things go on and on. So I think we're extremely confident because we know there's lots of gold there. We've obviously got sort of step out holes which haven't been brought into resources because there isn't enough density of holes yet. And obviously I think the other factor I'd say is all of these resources we've got are fully pit constrained. So ultimately, you know, there is obviously more gold there which ultimately does not fall within the pits, which have been constrained. So obviously we're already aware, you know, where there's more gold, and obviously you can look to infill and put more density of drilling around places to add ounces, certainly. But as I said, it's obviously a balance. Our focus very much is getting onto production and focusing on cash flow, delivering cash flow. So for us, there's a balance between adding reserves and adding total inferred ounces.
Yep. Okay. That gives me two different ways I can go. Let's talk term sheet. Let's talk financing. So when after the DFS can you actually draw on the term sheet, and when do you think that might be, Bert? And how does it work in practice? Do you want to just sort of break it down and tell us how you anticipate it's going to work?
Yeah, I think there's a few factors at play here. Again, I guess by putting sort of timelines and exact things on it, you always risk yourself tripping over yourself. But you know, ultimately, there's there will be a debt package. There's obviously the equity term sheet, and which has already been signed, which we're looking to obviously convert and draw on. My expectation is that there's probably going to be a period of at least 3 to 4 months, potentially 5 months, where you're going to be looking to complete the permitting, and at the same time looking to negotiate and get a debt package as well as part of the project financing, and then obviously go through the various hurdles to sign off the term sheet. Ultimately, the term sheet, we need to get into detailed documentation on it. Obviously, I'm already engaging with Lionhead continuously. I had an update call with them yesterday, actually, to take them through the progress on the project. And between now and completion of the DFS, there'll be monthly update calls on them. So when the DFS is completed, they're not just seeing it cold. They're abreast of, obviously, the developments as the rest of the market will be with RNSs updating on progress as we go. In terms of the term sheet itself, as we said, up to 30% of it, the Lionhead are prepared to syndicate with other shareholders. I think we need to put in place, we haven't put in place a specific mechanism of how that would work. But I think also, hopefully people can clearly see in the recent fundraiser we did, which was at a premium to the spot price, ultimately that was led by our larger shareholders, happy to continue to hold the 10p price. They do have, and we do have, the interests of the retail and some of the smaller shareholders are in mind and at heart. So I'll certainly be looking to make sure there is a mechanism whereby smaller shareholders are able to come into the fundraise on the same terms as the term sheet, but that specific mechanism hasn't yet been set up.
Okay, which takes me neatly to a question from worried retail investors who say that they're worried that if they load up with shares now, they're not going to be invited to join the capital raise when it happens post DFS, and that they may get diluted in the process. So you've touched upon that, but it's quite complex.
I think I'm hoping. I mean, I'm obviously hoping the post DFS construction fundraise will be done at a higher price than we are now. Obviously, I think with a significant increase in gold resources, I'm hoping the DFS will show a much larger project than our scoping study currently does. So hopefully the growth in the scale of the project, which the resources have delivered, will follow through in a feasibility study and show a more positive feasibility study than our scoping study in terms of NPV and size of the project. So I'm certainly hoping that the financing will be done at a higher price initially. But ultimately, I mean, look, I think I can only say, look, we'll do our best to make sure that the retail shareholders are able to come into the project financing as best they can, as best as we can. So yeah, does that answer the question, Don? I feel like I've lost my train there slightly in the middle.
Well, there's 30% which is going to be farmed out. Will it be part of that 30%?
Yeah, that's my anticipation. Yes, I mean that's give or take $8 million, which could be farmed out. So hopefully that will cover. I mean, given our largest sort of 3-4 shareholders potentially own about 60% plus of the business, I guess the portion which doesn't own the other 40%, I would have thought even if everyone followed their money, they would be we'd be happy, there'd be space.
Okay. Jay Deacon says, Bert, excellent progress at Cora. And then it's not so nice from now on, Bert. Hummingbird have repeatedly faced mining issues in Mali. What are you going to do to ensure that you can mine to plan? Brackets, I'm referencing Hummingbird's operations given your background. And for everybody else, you came from Hummingbird, right? Yeah,
I spent 10 years of my career at Hummingbird. I lived in Liberia on the Digby project, which is obviously being operated by a Canadian company called Pasofino now. I was, I guess, part of the corporate team when we acquired Yanfalila when I was at Hummingbird. And obviously, lots of that project's gone very well. And I don't necessarily want to dwell on that too long, but ultimately, the execution of the financing, the construction, ramp up and moving into production all went extremely well and was very positive. But ultimately, they've had obviously some negative issues which have impacted production over the last couple of years. And I haven't been there for a couple of years, so I can't talk in too much detail. I think in life, generally, you learn more from your mistakes than you do from when it's going well.
It's worth stopping you there, saying, Bert, how can you avoid making those mistakes? I think is Jay Deacon's question.
Well, I think obviously you need to hire the right management team to operate it and the right contractors to operate your mine and make sure they don't happen. I think obviously you can learn from mistakes and operational issues which all mines across the region might have, whether it's the impact of a wet season on your open pit, or the pit slopes you're using, or lots of things you obviously look to improve on. Look to learn from. So yeah, I think I talked about Russell Bradford having lots of experience. I think all I can do is look to bring in experienced people to help me operate the business in the mine. Okay,
and always a useful question. What might an exit look like, Barrett? I mean, fantastic. We've got to the stage in your project. We're actually talking, about an end game. What might your potential end game be?
Well, clearly, I mean, we want to build a mine at Sanankoro, and we want to deliver that mine, and we think that's the best route to add shareholder value, and we're keen to accelerate it as quickly as possible. I think a lot of companies might have stayed in the exploration phase for longer before moving into a feasibility study. Our view is that that would continue to add dilution to our shareholders. So actually trying to move towards a position where we can construct a mine and deliver an operating gold mine will hopefully protect shareholder value as much as we can. In terms of an end game, I'm not even thinking about an end game at all. For me, the next 3 years is about delivering DFS, delivering permitting and financing, getting into construction and delivering a mine. I think that's hopefully what shareholders want me to be doing. And I think I haven't got any thought about an end game at all. I mean, yeah, we're looking to build a mine and deliver as good a free cash flow as we can, and trying to return money to shareholders as quickly as we can.
Bert Monro, CEO at Cora Gold, thank you so much for joining us tonight. That was terrific. Thank you.
Pleasure. Thanks, Donald.